Good morning, everyone. Happy Wednesday. I hope everybody's safe and healthy. 3 points that you can look to hear about in today's edition. We will see what the G7 central bank support is for April, a statement from another close aide of Trump on China, and we'll also dig slightly deeper into the most crowded trade since 2017. US stocks dropped late, declining for the first day in 4 on a report that Moderna's encouraging coronavirus vaccine results lack sufficient data. Now, the S&P 500 lost 1% and Dow gave up about 400 points. Treasuries gained, sending the 10-year yields below the 0.69%. The dollar fell against most G10 peers, with the Kiwi leading the gains, though yen weakened slightly. Now, WTI rose while Brent fell and gold advanced. Now, Asian equity futures are pointing towards a lower open. The news that dragged the markets down came from Stat, which claimed that the company withheld some key information about the coronavirus vaccine. So the health and biotech focused site noted that the lack of press release from the government agency working with Moderna, as well as some missing information needed to interpret the data. The company in the meantime fell from a record high and said that the additional information will be disclosed at a later date. Steve Mnuchin plans to use all the $500 billion the Treasury was allocated to help the economy and is willing to take on more risk to do so. We are fully prepared to take losses in certain scenarios, is what he said, the Senate Banking Committee. Powell also was with him, and he also reiterated that he's willing to use the full range of tools to support the economy. Oil gained in New York in a choppy trading day. US crude inventories fell about 4.84 million barrels last week, and that supported a little bit of a move higher. Now, the health crisis has pushed major central banks to take extreme steps to support growth and underpin financial stability. Net asset purchases for the G7 central banks were about 1.3 trillion in April, which is slightly higher than the 1.2 trillion that we saw in March. Now, this is extraordinary because this is almost 5 times higher than the previous peak that we saw of 270 billion in April 2009. So we've been consistently printing above 1.2 trillion over the last 2 months. Larry Kudlow said nobody can invest confidently in Chinese companies and that the US needs to protect investors from China's lack of transparency and accountability. So potential lawsuits against Beijing over COVID-19 also needs to be resolved first. That's what the advisor told Fox. Now, since mid-2017, concerns over crowded positioning in the Nasdaq and the tech sector among the FANGs has been consistent among fund managers. But what is driving this? Why is this happening? Couple of points to note there. One, Nasdaq provides far superior sales growth, better profit margins. So Nasdaq profit margins average nearly 1.5 times those of the S&P 500, which is in the past 5 years. And also the aggregate net debt to EBITDA ratio of Nasdaq is nearly a tenth of what we see in the S&P 500. So, better growth and better margins with less of leverage. Sticking with equities, Walmart's e-commerce sales rose about 74% as consumer stockpiling helped results beat. So the world's biggest retailer said on Tuesday that it's been selling in 2 to 3 hours what it would normally sell in 2 to 3 days of some products. And it had hired about 235,000 workers in the US to cope up with the surge. So after an initial surge to stockpile grocery staples, consumers under the lockdown health spent heavily on entertainment, education and exercise, both in stores and online, is what the chief executive said. But its shares were lower since it's been trading near record highs. It slid about 2.1%. Home Depot said limiting traffic in sales in stores has hit sales in many markets. So at Home Depot, sales rose, reflecting some interest in do-it-yourself projects, but shares dropped by about 3%. Walmart and Home Depot suspended their outlooks for the year. Department store Kohl's also reported a 44% decline in the first quarter net sales. They also suspended dividends and buybacks. Target and Lowe are up next. Xiaomi is also expected to have defined China's smartphone slump. That result will be coming out later today. Microsoft's latest deal is robotics, though Satya Nadella announced the acquisition of Softomotive, a software that automates repetitive tasks such as data entry. Johnson & Johnson discontinued its talc-based baby powder products in North America. Facebook is renewing its commitment to shopping and e-commerce, this time with Mark Zuckerberg's personal involvement. The CEO announced Shop, a new version of an existing feature that will let retailers upload product catalogs to their Facebook page and Instagram profile. On the rates, just 1 point, Eurozone stimulus via Germany and France agreeing on a EU recovery fund has lifted the euro and bodes well for Italian debt in particular. Implementation of the proposed 500 billion EU recovery fund is a key issue. While the scale is modest, the market sentiment has been buoyed by the underlying message of unity for the two Eurozone members. Moving on to Forex, most of the major currencies powered higher, even though the stocks gave up part of Monday's gains. Dollar yen rose above 108 but ended the New York session at 107.75. US housing market data was out yesterday. It contracted further in the month of April. Housing starts, falling 30% and building permits fell 20%. It's no surprise. Housing will be one of the sectors that will suffer the most and will probably take the longest to recover. The tides are turning for the euro, though. German and Eurozone investor confidence improved significantly in the month of May. German ZEW survey jumping to 51 from a 28.2. So the data shows that existing sentiment is weak, but expectations rose to the highest level since March 2015. So it's clear that everyone is looking forward to a recovery that is expected to start soon. Remember, we also saw a similar improvement in the US consumer sentiment last Friday. So aside from the early signs of bottoming out on the Eurozone economy, investors are also pleased with the Merkel and Macron's proposal for the Euro 500 billion recovery fund on Monday. That's your market update. Stay safe and healthy, everyone. Thank you very much.